Hey everyone, how's it going? This is Adam Villaneda with Wholesale Capital Corporation, and today what I want to bring to you is Credit 101 in 7 steps. And I have Cesar Marrufo from Elite Financial LLC with us today. He's been in the business of credit repair for over 12 years. He's based out of Yucaipa, California. He's helped over 5,000 people repair their credit score and the credit report through education, and that's what we want to share with you today. So Cesar, I want to welcome you to our webinar here.
Great. Well, thank you for having me out, Adam.
You're very welcome. Thank you for being here. So let's go ahead and get started. And
you know what? If we can, I don't mean to cut you off, but I always like to start off with a scripture here, and just keeping our focus, back on the good book. Ecclesiastes 11:4. He who watches the wind will not sow, and he who looks at the clouds will not reap. And it relates to just waiting for those perfect conditions. If you're always waiting to do something and you think you're just going to wait for that right time, that time's never going to come. That time is always now, and it's always there to act upon. So I just always wanted to bring it back to our main focus in my life anyhow.
So we want to make sure that you go ahead and take action. Don't wait for it. It's never too late. Be brave and take that first step.
Absolutely. So if we could, let's go through a quick overview, if you don't mind.
Go for it. Tell us what we're going to cover today.
Okay, we're going to just cover, a basic credit 101 in 7 steps. And really what it is, it's something that should be taught in high school. It's really not. Nothing that I was taught in high school, and going through this and talking about this I have high school kids, teenagers, and they're not being taught this at all. And so it's a shame, it's unfortunate, but our goal with Elite Financial is to get this to be redundant to American consumers. And if we can do that and get this into every household, I think our nation's going to be better off. And so what is credit, scoring, what that whole process is, the profiling, the bureaus, how to maintain it, your rights, and then where to go for some help. Real quick disclaimer, Adam. Number one, I'm not an attorney. Okay, I'm not telling people, advising them not to pay their bills, and I'm not advising them to pay their bills. This is a basic education course here that we're just going to run through. And again, biblical principles are something that our company values. And, we're really taught to pay our debts and to repay what we borrow. Our company is different because of that. We like to maintain focus on dealing directly with creditors and handling them directly in the right way. So just keep that in mind. This is a true disclaimer.
All right, sounds good. So with that said, Cesar, tell me, what is credit?
Sure. Credit, really what it boils down to is your likelihood for filing for bankruptcy. And that's the gist of what it all boils down to is, are you going to file for bankruptcy? If you're going to file for bankruptcy, how soon do you think you're going to file for bankruptcy? And not you, anyhow. It's really what the banks are going to gauge it by. And it's using that value, your credit worthiness, to obtain an extension of credit, to borrow money. Everything we talk about here, and like so many things in life, it's all relevant. Everything is important. Not one is worth more than the other, so to speak. There are some that will have a greater weight, but everything is relevant and everything fits together just like a puzzle.
Okay, sounds good. So tell us, is there a certain way that the credit bureaus actually create a score? Is there something that, if I have this, I know my score? Is there something like that?
Yeah, absolutely. And, being in the industry for as long as I have, I can pretty much look at a credit report and get a good idea of where a consumer stands. But when it comes down to the actual number, it's an algorithm. It's a basic mathematical equation that sort of goes into this machine, if you want to call it, and it spits out a number. This number varies, and you're going to see that. If you ever pulled a credit report or even looked at your own credit report, whether it's from an auto company, whether it's a mortgage company, maybe it's online, and what you're going to see is, even for the same credit bureau, you're going to see a different credit score. You can have them all pulled the same day and get 3 different scores for that same bureau. And there's a number of reasons behind that. Most importantly is, every industry is going to use something different in what they're looking for. Auto loans are going to mainly look and focus on your installment loans. How good were you in your past at paying a regular monthly payment for a period of time? Mortgages are going to be pretty diverse and look at a good mixture of everything. And nowadays you're going to need to look at your credit report and credit scores for many jobs. Nowadays you're going hunting for employment, and they're going to want to look at that. You're going to need to rent a house, and unfortunately, in the way we're set up here is, I get talked to many people who their insurance, medical insurance, doesn't cover a certain operation or some type of procedure that they need, and they're going to need to borrow some money in order to pay for that. So, using your credit and understanding how it all works is extremely important so that way you can just position yourself to be the best you can be when you're going to apply for credit.
Okay, so with the credit scoring algorithm, each place or each type of industry pulls a different type of credit report that has a different credit score, even if it's pulled on the same day. Is that correct?
Absolutely.
Okay.
Yeah.
And that scoring matrix is made up of something called a pie chart, right?
That's it. And what you'll see here is, this is common knowledge here. This is what you're going to find on the FICO website. And the FICO is the company who started this whole thing, and we'll get into that in a minute. But your profile, what you see here is, broken down into percentages. Again, everything is relevant and relative to each other. 10% of that is going to be your types of credit in use. You're going to want to have a good mixture of credit. So you want to have an installment loan. You want to have some credit cards and mortgage, auto loan, this type of thing where you want to have different types of credit borrowed. You're also going to need to have and keep down your inquiries. You don't want to go and search for credit and start applying everywhere. 10% of that is going to be based upon how often you're applying for credit and how new your credit is.
Can I interrupt you real quick on that? When you say applying for credit, do you mean within different industries? I know when we pull mortgage credit reports with our mortgage tag, you can pull up to about 4 times within about 2-week period and not have any discrepancy. When you say new credit inquiries, are you talking about mortgage and then like an auto loan and then maybe to Nordstrom or something of this nature? Are those the types of inquiries that you're talking about?
Yeah, exactly. And what we're talking about is a hard inquiry where you're going to be sort of shopping around for a mortgage, and you're saying within a 45-day window or even a 60-day window, you're going to be looking for an auto loan. You'll be searching for a new phone. You're going to be running your credit for a credit card and what have you. So yeah. Different industries are going to pull your hard inquiry, and that's going to affect your score. And then 15% of that is your length of history, how long you've had it open. It's really important to keep your older credit cards open. The longer you have your revolving credit cards open, the higher your scores are going to go. 30% of your scores are going to come from, and they're going to be based on the amounts that are owed compared to your available limit. So you want to keep that down. And then a big chunk of this is your payment history. Were you late 30 days? Were you late for longer than that? And the more recent, the more damaging it's going to be on your credit.
Okay, great. So now let's talk about the credit bureaus here. We always talk about hearing my score is this. Where do these scores come from? Who are they?
Yeah, and these are the three, in my industry, these are the 3 big bad boys here, the 3 big bad wolves, if you will. And the 3 big ones that most lenders are going to really be considering and looking at is Experian, TransUnion, and EFax. And what credit bureaus are is they are keepers of information. All they do is hold information. And then they charge people for that information. There are others. There are Innovis for businesses. You'll have your own credit as well. And tri-merge credit reports would be considered all of these 3 credit bureaus inside of one. And I think, Adam, what you're familiar with,
yeah,
right?
Absolutely.
Yeah, so that's something that you'll see is you'll see a 3-in-1, and some of those are easier to read, and some of those are more difficult to read. The only true place you as a consumer can go and get, and the only place that it's going to be free of charge is going to be annualcreditreport.com. Now, this is the federally governed website that you want to go to. You see those commercials on TV with the fancy jingles, and they're paying a lot of money to put that marketing and advertising out there, and they're doing a good job at it. I'll give them that much, but it is only out there to make them money. Okay. The credit bureaus are not a government agency. They are a for-profit industry, and they make tons of money off of simply holding your information and charging others to see it.
Okay. I want to add one thing on here too with the annualcreditreport.com. This is the only place that you can get it for free. I pull credit reports and I get asked all the time, can you send this to me? And unfortunately I can't, because it's against the law basically. Because I'm not a credit reporting agency, I can't report to you what your credit scores are. I can show it to you, but if you want a copy of it for yourself, you'll definitely want to go to annualcreditreport.com.
Mm-hmm.
Okay.
And I don't know if a lot of you, the consumers, know this out there, but Adam, when you do pull your credit, it costs you money. And
Absolutely.
it's part of doing business, but that's just a great example of the credit bureaus holding information, charging other companies to look at it, to basically look at your information. So, from where I'm standing from, it better be at least accurate. I mean, it shouldn't be close to accurate. It should be accurate as accurate can be. And that's the stance that we take in looking at this information.
So with that being the point into our next slide here, we want to talk about how do we maintain a credit score, credit report.
Great. Yeah, that's absolutely. And these are some of the 4 basic things you can do. We're going to cross over 4 of these. Number 1, pay on time. And if you have a bigger chunk of credit cards that are due, pay more than the minimum amount due, but most importantly, pay it on time. Number 2, the magic number here, 30%. And this, we're talking about revolving debt. Credit card balances, you want to keep that below 30% of your available limit. Quick example, you have a $1,000 limit on a card, keep it below $300. It's obvious to keep it way below that, but that magic number, anything over that is going to start detrimentally affecting your credit scores. A third thing you can do, and this is something we just talked about, is go into your annualcreditreport.com, check your credit report, and then challenge these for any inaccuracies. And number 4, that topic that comes up a lot and get questions I get a lot is, you got to use your credit cards. Using your revolving debt credit cards each month instead of them sitting there with a zero balance, not doing anything.
So, and we discussed this a little bit, Cesar. When we're using these credit cards and we pay them off, and some of us keep zero balances, and you said that may affect us negatively. Is there a certain time period where it becomes inactive usually?
Yeah, what I'm finding is about the 180-day mark. If accounts are going to be sitting and not having any movement for about 6 months, a couple of things can happen. Number 1, and what I'm finding very often is a credit card company is going to lower your limit, and that's going to damage your credit scores because it's taken away from your available limit. Or worse, they can actually close the account, and that's what I'm finding as well. They want to close their liability down as much as they can, and they will shut your accounts down.
Okay, and so a little word to the wise: when we say use credit cards, we're using credit cards within our means, with the money that we have available to pay them off at the end of the cycle. We don't want you to go berserk. What we are trying to convey with the use of credit cards is a direct correlation of building credit, not going out and spending thousands of dollars on credit to overextend yourself. We want to make that very, very clear too.
And that's something that I'm glad you brought that up, Adam, because whenever somebody comes across this presentation and I talk about using your credit cards, their eyes light up and they say, "Oh, great! They've given us permission to go and use our accounts." But no, I'm not. You use it as cash on hand. That's the way you're supposed to be using your credit anyhow. You don't want to overextend yourself. And even if it just means, carrying a $5 to $20 balance on there and paying that off the next month, something like that.
It comes back to the big R word, right? Responsibility.
That's it. That's absolutely it. And that's a word that people don't want to hear nowadays, but it's the absolute truth to maintaining your credit.
Okay, fantastic. So what are some of my rights when dealing with credit cards, credit issuers, credit reports? So
say, for instance, you check your credit report and there are inaccuracies on there. Showing a balance that's no longer there. It's showing some late payments. Well, you do have some avenues here. Who are you going to contact and what are you going to do? One of the first places you go is to the credit bureaus to dispute, and there are some laws that are governing out there. Fair Credit Reporting Act, Fair Debt Collection Practices Act. There are some HIPAA laws that relate to medical information out there. Truth in Lending Act that governs credit card companies, and then there's various state laws. In addition to the credit bureaus themselves, the FTC is a big one for, and if you gets to a point where you need to write complaint letters, who do you go to? The FTC, your state attorney generals.
And real quick, for people that don't know what FTC stands for, the Federal Trade Commission.
Yes.
Okay.
Now, Federal Trade Commission, state attorney generals, Better Business Bureau. There will be some local attorneys that specialize in this industry, and then a company such as us, where they've had some experience in dealing with missing information or mishaps.
Fantastic. So let's talk about what we do to get some help here. What do you suggest that people do if they have some credit questions or some they need some advice or guidance?
Well, if there's somebody out there right now that's listening and you're looking for some help, call a professional. That's the very first thing you want to do. Get a copy of your credit report and take a look at that. Elite Financial LLC is out here. We always offer a free analysis, a free consultation to just get you a plan of action, and it doesn't cost you a dime. That way, the exam is really one of the most important first steps here. In that you're going to be taking a view at your credit report, and then if you have a friend in need as well, you may want to refer them so that way they can get some help in addition to it.
Fantastic. So again, this is Cesar Marrufo. His information is right here on the screen. Please feel free to contact him, bless him with your business here. And do you want to say something?
Yeah, if I would, I always like to close as well. Proverbs 21, verse 5. Good planning and hard work lead to prosperity, but hasty shortcuts lead to poverty. That was me. Thank you for having me out, Adam. Credit Score Solutions Made Simple. Anything that has to do with your credit report, we can help you with.
Thank you so much, Cesar. And again, my name is Adam Villaneda with Wholesale Capital Corporation. We're a direct mortgage lender out here in Southern California. We offer conventional FHA, USDA, VA loans for purchase and refinance. Talk to you soon. Thank you very much for listening.